If you own your home and you're over 65, there are 4 states where you can legally freeze your property tax bill so it never climbs again, no matter how high home values or town budgets go. And nobody at the county is ever going to mail you the form or call to tell. Before Raymond's story, do one quick thing: subscribe and turn on the bell so the county's silence isn't the only voice you hear about your own money. Now, Raymond. I'll call him Raymond. He's a stand-in for a whole lot of people I've watched go through this. 74 years old, same brick house he bought back in 1979. The mortgage? Gone. Paid off years ago. He owns that house free and clear. But this year, the property tax bill landed in the mailbox, and it had jumped again. So there he is, at his own kitchen table, calculator in hand, doing math he should not have to be doing at 74, figuring out what to cut so he can pay a bill that keeps growing. And here's the thing. He did nothing wrong. He didn't miss a payment. He didn't break a rule. His town just reassessed, home values in his neighborhood went up, and his bill went up right along with him. That's it. He got punished for owning a house that got more valuable. Here's the part that stings. A retiree in exactly Raymond's shoes, same age, same fixed income, same rising bill, can, in 4 states, legally freeze that bill so it never rises again. Lock it. For good. And nobody whose job it is to collect that tax is ever going to pick up the phone and tell you to stop paying more. Think about that. The county sends the bill when it goes up. They will never send a letter when there's a way to make it stop. So let me tell you what we're doing here. 4 freezes, 4 states. We'll walk each one. And the 4th one, save your energy for that one, is the simplest to apply for and often the biggest in dollars. If you only act on one thing in this whole video, it's that last one. So stay. Now, before you tune out, and I know some of you are already doing the thing, some of you are thinking, Walter, this is for poor folks. I make too much. And some of you are thinking the opposite. This is for rich people with fancy houses, not me. Stop. Both of you, stop. This is not only for the poor, and it is not only for the rich. On every single one of these 4, I'm going to tell you exactly who it helps most so you know where you stand. My name is Walter Hayes. For more than 15 years, I've spent my days reading the fine print of these government programs, the exemptions, the freezes, the deferrals for ordinary families. I don't sell anything. I don't work for the government. I've got no form to push and no fee to collect. I just read the rules so you don't have to. And because I read them, let me clear up the biggest myth right now, because this is how people get talked out of their own money. There is no single national law that freezes senior property taxes. None. If somebody tells you there's one federal rule that freezes every senior's bill across the country, they're wrong. It doesn't exist. What is true is this. Specific states run real, honest freeze programs, written into law, money with your name on it. But being legally entitled and actually getting paid are 2 completely different things. The entitlement sits there. The form sits in a drawer at the county office. And unless you walk in and ask for it by name, nothing happens. Quick thing. If your property tax bill went UP this year, and I mean it climbed on you the way it climbed on Raymond, comment the word frozen below. Just frozen. I want to see how many of you this is happening to, because I promise you, you are not the only one at that kitchen table. All right, state number 1, Texas. Here's what it is. In one breath. In Texas, once you turn 65, your school district property taxes freeze at a ceiling. School taxes are usually the single biggest chunk of a Texas property tax bill. And at 65, that piece stops climbing. It gets locked at a ceiling amount, and it can go down, but it doesn't go up. Sounds automatic, right? It is not. And here's the trap. That freeze only kicks in after you file the over 65 homestead exemption with your county appraisal district. You have to file it. You have to claim it. The ceiling does not set itself the day you blow out 65 candles. And guess what nobody does? Nobody mails you that form. The appraisal district knows your age, your birthday is right there in their records, and they will still not send you a thing. The form nobody mails you. You have to go get it. Who does this one help most? This is the beautiful part about Texas. It doesn't care what you earn. There's no income limit on the over 65 school tax ceiling. Whether you're a retired teacher on a modest pension or you've got real savings tucked away, if you're 65 and it's your homestead, you qualify. Every Texas homeowner 65 and up. Rich, poor, in between. So here's exactly what you do. You call your county appraisal district, not the tax office, the appraisal district. They're the ones who handle it. And you say these words. I'm a homeowner over 65. This is my primary residence. and I want to file the over 65 homestead exemption. Ask for that form by name. The over 65 homestead exemption. That one sentence starts the whole thing. And listen, whether you think you make too much for this or too little for this, do not count yourself out at your own kitchen table. Stay with me, because Texas is the easy one. Texas freezes for everyone, 65 and up, no questions about your income. But the next two states, they hide the money behind an income line and a form you have to RE file every single year. Miss a year, and the freeze quietly falls off. We start with Illinois, where a household earning around $65,000 a year can lock their home's assessed value, and where a widow, I'll call Margaret, paid 6 years of rising bills before a single person finally showed her the form. Illinois. A household earning around $65,000 a year can lock their home's assessed value with the senior citizens assessment freeze, and Margaret, a widow bringing in about $28,000, paid 6 years of rising bills before a single person finally slid the form across the table to her. Let me tell you exactly what this one does, because the name trips people up. It's called a freeze, but it doesn't freeze your tax rate. It freezes your home's assessed value. That's the number the county uses to figure your bill. So even after home values on your street climb, your assessment stays where it was the year you qualified. Now, I'm going to be honest with you, because that's the whole job here. Your bill can still nudge up a little. If your town raises the tax rate, that rate gets applied to your frozen value. But the big driver, soaring assessments, as neighborhoods get pricey, that engine gets switched off. And in a hot market, that is where most of the pain comes from. Here's the gap. The one that costs Illinois seniors real money every single year. You have to reapply. Every year. This is not sign up once and forget it. Miss a year, and the freeze can lapse, and your value snaps right back up to market. And nobody at the county is going to call and remind you the deadline is coming. The form nobody mails you, this is a program built entirely around that form. And who does this help most? Not who you'd guess. A lot of folks hear income limit and count themselves out before they even read the number. They assume it's a program for people barely scraping by. It isn't. That household limit sits near $65,000. That's a couple with a decent pension and a little Social Security. That's a retired teacher and her husband. Modest and middle-income Illinois homeowners over 65. That is the heart of who this was built for. And a huge share of them never apply because they're sure they earn too much. Don't count yourself out at your own kitchen table. Back to Margaret. Picture her. I'll call her Margaret. And she's a stand-in, not a real client, just a face for the numbers. Widow, 68. Income, about $28,000 a year. For 6 years straight, her bill climbed, and each spring she paid it because she thought that was just how it worked. Then a woman at the assessment office finally handed her the application, one page, and said, "Fill this out." Margaret qualified the same day. Her assessed value locked. And the money that had been quietly leaking out of her check for 6 years, that was money with her name on it, sitting on the table the whole time. So here's what I want you to do if you're in Illinois. Contact your county assessor, or what's called the Chief County Assessment Office. Ask for it by name, the Senior Citizens Assessment Freeze Homestead Exemption Application. Say those words, and write this on a sticky note and put it on your fridge. You file it every single year. Not once, every year. And if you live in Illinois, type IL in the comments. I promise you, your neighbor 2 doors down is already frozen and never told you a thing about it. Now, you just heard a low-income widow qualify for a program some people swore was too rich for. So let me flip it the other way, because the next state doesn't just freeze a number. This next one doesn't freeze your bill. It mails you a check. Read that again? New Jersey, the senior freeze. Its official name is the property tax reimbursement, and that word reimbursement tells you exactly how it works. And it's different from anything we've talked about so far. Here's the mechanism. When you qualify, New Jersey sets what they call your base year. That's your property tax bill locked in as a reference point. From then on, when your actual bill rises above that base amount, the state pays you back the difference. Let me be precise about that, because it matters. It does not lower your bill. You still pay the county the full, higher amount. What happens is the state reimburses you the increase. Not a discount up front, a check in the mail for the gap. So if your base year bill was, say, $6,000, and this year's bill comes in at $7,000, that $1,000 climb is what New Jersey sends back to you. Every year it rises, they cover the rise. Your out-of-pocket cost effectively stops at your base year and stays there. To qualify, you have to be 65 or older, and there are income limits. Now, I have to level with you. Those income limits shift every single year in New Jersey, and I'm not going to stand here and read you a figure that might be stale by the time you're watching this. You confirm this year's number directly with the source. I'll tell you exactly where in 1 second. And the gap on this one is real, so hear me. To get paid, you have to establish your base year, hold it, and then file a reimbursement claim each year to collect. Skip a year, and it gets messy. You can lose your base year and have to start over. Same trap as Illinois, different wrapper. The entitlement is one thing. Actually getting paid is a completely different thing, and the difference is a form nobody sends to your mailbox. Who does this reward most? Longtime New Jersey homeowners who live in the home they own, 65 and up, on a fixed income, who've watched their bill creep for years. The longer you've held the house, the more that reimbursement stacks up, because your base year is anchored back when bills were lower and the gap keeps widening in your favor. That's real cash flowing back, not a scheme, not a loophole. Money with your name on it. Here's your action. The form you're asking for is Form PTR 1 if it's your first time, or Form PTR 2 if you're a returning filer. Request Form PTR 1 or PTR 2 and confirm this year's income limit with the New Jersey Division of Taxation. Do not guess the limit. Get it from them. And nobody whose job it is to collect that tax is ever going to call and walk you through this. You go to them. So now you've seen both sides of the doubt. Too poor? Margaret says no. Too rich? That 65,000 line and a cashback check say no. The money is real and it's reachable. But notice what these two have in common and why I'm about to send you somewhere better. Both Illinois and New Jersey make you come back and file every single year. Miss the deadline, lose the freeze, it's a leash. The fourth freeze, the one I told you to stay for, needs just one application to lock your bill for good. No yearly refiling, and it's running in states like Washington and beyond. Here's the exact sentence that starts it. One application, not every year once. You file it, it gets approved, and your bill stops climbing. That's the whole thing. Many states run a program like this. A senior freeze or a senior exemption where a single application locks your property tax bill in place for good. Places like Washington and others beyond it do exactly this. The rules and the income lines vary by state, so you'll need to confirm your own, but the shape of it is the same everywhere it exists. You qualify once, you claim once, and the number on that bill stops chasing you. Here's who this one helps most. Longtime homeowners who actually live in the house, 65 and up, on a fixed income. And here's the part that matters. If you've been quietly counting yourself out depending on your state's limit, this can cover both modest incomes and moderate ones, not just the widow scraping by, not just the well-off retiree either. A lot of ordinary folks in the middle qualify and never find out. Because same gap as the other three. No county mails you this application, nobody in that assessor's office is going to pick up the phone and walk you through it. The freeze is sitting there, real and legal, and the only thing standing between you and it is a form you have to go ask for. Being entitled and actually getting paid are two completely different things. This is the one I told you to stay for. If you only act on one thing from this whole video, make it this call. So let me hand you the exact words. You call your county assessor's office, not a website first, not a search the office, and you say this: I'm a homeowner over 65, I'm on a fixed income, and I want to apply for the senior property tax freeze. That one sentence starts everything. Then you ask them for the form by name, whatever they call it in your county. You say, give me the form and tell me the income limit and the deadline. Write both down. That's it. That's the whole move. Now let me add it up for you, because numbers on a page don't land until you see the year behind them. Take a retiree like Raymond. His bill jumped again this year, a few $100s, then a few hundred more the year after, and it keeps going as his town reassesses and home values climb. Freeze that bill, and you stop the climb cold. For a homeowner like him, that freeze can be worth $2,000 to $3,000 a year. Read that again, $2,000 to $3,000 every single year that would otherwise disappear out of a fixed income he can't stretch any further. And here's the part most people miss. It compounds. Home values in his neighborhood don't sit still. Next year, they're higher, and the year after that, higher again. Everybody else's bill rides that wave up. Raymond's doesn't. His line stays flat while the whole street climbs above him. 5 years out, 10 years out, that gap between the frozen bill and the rising one is enormous. That is, money with his name on it, real dollars, his dollars, that were about to sit on the table forever. Remember Raymond? The man at his kitchen table, 74 years old, doing math. He never should have had to do mortgage, long gone, but the tax bill climbing anyway. He did nothing wrong. His town reassessed, values went up, his bill went up with them. One call to his county appraisal district, one form asked for by name. And that bill stops climbing forever. He didn't know the option existed. Now you do. That's the difference this whole video is about. Not a new law, not a loophole, not something you have to be rich or poor or clever to use. Just a real program, sitting quietly, waiting for someone to ask. Nobody whose job it is to collect that tax is ever going to call your house and tell you to stop paying more. That call has to come from you. So let me make it simple. Here is exactly what I want you to do this week. 1. Call your county assessor's office. Find the number, pick up the phone, do it before the week is out. 2. Ask the plain question. Does my state have a senior property tax freeze or a senior exemption, yes or no? 3. If yes, request the exact form by name and ask them to spell out the income limit and the age line so you know where you stand. 4. Get the deadline. Every one of these has a filing window, and if you miss it, you wait another whole year while the bill climbs again. 5. Mark that deadline on your calendar. The wall calendar in the kitchen, the one you'll actually see, not a note in your head. On the calendar, 5 minutes of phone calls this week against thousands of dollars a year for the rest of the time you own that home. That's the trade. Make it. Now, one warning before you go, because the moment money like this is on the table, the thieves show up right behind it. Your county does not call you out of the blue. The state does not call you out of the blue. They will never phone your house asking for your bank account number, your social security number, or a fee to file your freeze. There is no fee to a scammer to claim a benefit you're already entitled to. So if your phone rings and somebody says they can lock in your senior freeze today, they just need your card number to process it, that person is a thief, not the government. Stop. Hang up. You go to them. You call the county. You never let the county call you. Do one thing for me. Send this to one person over 65 you love, a parent, a neighbor, the friend down the street who's been quietly worried about their own bill, because nobody official is going to call and explain this to them. The form won't show up in their mailbox. You might be the only one who ever tells them. You might be the only one who does. Let me be straight with you about what this is and isn't. This is general education, not personal legal or tax advice. The programs are real, but the income limits, the age lines, and the deadlines vary by state, and they change. So before you count on anything, confirm your own situation with your county assessor's office or your local SHIP office. That's the free counseling service in every state that helps seniors with exactly this. They'll tell you what applies to you for free. But don't let "I'll check on it someday" turn into another year gone. That's how this money stays lost. Not because anyone stole it, because the form nobody mailed you sat there and the call nobody made never got made, and one more bill climbed while a good person did math they shouldn't have to do. You know, the 4 freezes now. Texas, at 65, after you file the over 65 homestead exemption. Illinois, the assessment freeze you have to reapply for. New Jersey, the senior freeze paid back on Form PTR-1 or PTR-2. And this last one, the single application that locks your bill for good. You know the sentence to say. You know the steps for the week. Raymond didn't know the option existed. Now you do, so make the call this week and send this to one person over 65 before their next bill climbs again.